If you are someone who missed this entire rally and you're just wondering when the hell is this train going to slow down, I thought we would pull back by now and I really want to get in, but it seems like we're playing this really diabolical game of Jenga where we are just building a tower on flimsy ground here. And on the flip side, if you are someone who has bought a lot of stocks and you are kind of worried in the short term what's going to happen, you want to know when to hedge, you maybe have some shorter term positions or some positions in leveraged ETFs that you want to trim and you're wondering when, I have good news for you because I discovered some crazy data here with regards to August. I've shared this with you guys before, but remember I told you that July was one of the best months in the stock market, second best month, only second to the holiday month of November. August and September are the two worst months in the stock market, but I don't think you know how bad it can get. So I don't know why I didn't pay attention to this before. You would think that this would be something that I could recall off the top of my head. I do remember the yen carry trade because of the Bank of Japan yields skyrocketing last August, but I just, for some reason, didn't remember that August 2023, we were suffering from a similar thing and saw a 10% correction. August 2022, we were in a bear market and suffered a 20% correction. And you're gonna wanna stick around for this because guess what, ladies and gentlemen? Japan's 30-year yield has hit an all-time high. This is what happened the last August when we had that massive correction. It was almost 10% in one day. I don't know if you guys remember. And this right here was August 2023. We are facing the exact same scenario right now. A lot to get into in this video, so I definitely want to talk about August seasonality, how I think you will have a massive opportunity to enter the market if you haven't done so, or to add to your positions if you've gone in half position, or maybe to sell some of your shorter term positions. I don't advocate anyone who claims that they are long-term investors to say, when should I sell my position? People don't even take into account the tax implications of selling your position early, right? If you are a long-term investor, you should only be thinking of adding, in my opinion, unless obviously you're close to retirement or you for some reason don't believe in a certain stock anymore. But either way, I think an opportunity is coming up and potentially a violent drop coming up in the next couple of months. And shout out to you guys who keep tagging me, telling me how good your portfolio is performing just from the videos. Some of these people aren't even members in the Discord. But whether you guys are in the Discord and you tell me you made your entire subscription in one trade, or you're coming from YouTube, keep tagging me in these. I love it. All right, so it seems like the market just will not stop. Now, this is one of the features of an almost 20% correction in the stock market, or 20% bear market in the stock market. I've shared with you the statistics of what happens when the S&P 500 narrowly avoids a 20% bear market. So for those of you wondering why we are up 2 months after the April Liberation Day drop, this is what typically happens when we narrowly avoid a bear market, a minus 18 or 19% drop in the S&P 500. 2 months later, super green. 3 months later, 100% green. 1 year later, 22% average gain. That is the average. That means half of the time we're even above that. And 100% of the time we are green 1 year later. This is why I think the next opportunity that the market drops, and we might get a big drop, more on that in 1 second, is going to be a major opportunity in my opinion, especially for those that missed this entire rally. Now we are coming up on half of July and it has been, as suspected, it has been really bullish. This is typically where the gains start to slow down. Doesn't mean we have a down month or a down rest of the month, but typically the gains start to slow down. They trail up towards the end of the month. This coincides with earnings actually. So we've officially kicked off earnings season, and towards the end of the month is typically when we get the mega caps, right? So Meta and Microsoft both of them are going to be reporting the same day. Tesla and Alphabet, both of them reporting the same day. Apple's on the 31st. Also, we are coming up on almost a record number of days above the 20 moving average for the S&P 500. And typically this is when we tend to see pullbacks in the market. Now let's talk about this extremely scary chart here. And it is scary. I'm not being hyperbolic, right? The Bank of Japan 30-year yield hits a record high. Now, what's going on in Japan? I don't want to give a discussion or a history lesson on bond yields in Japan, but basically in 2023, Japan really has shifted their policy on yields because Japan was suffering from extreme deflation and stagnation even for years. Japan has had negative interest rates for 17 years to try to spur growth. And now what they're dealing with is extreme wage inflation. So in August of 2023, what they did was they loosened their policy on their restrictive policy on yields. So they were essentially keeping yields artificially low. So in August of 2023, they officially ended that policy. August of 2024, they raised rates for the first time. So here in August of 2023, this created a panic in the market. And 2023, we were in a bull market, but this was a correction that lasted all throughout the summer until October before the holiday season kicked us off again. In August of 2024, this was again caused by a scare in Japanese yields due to the fact that they raised rates for the first time in 17 years. So here's where they relaxed their stranglehold on yields. They did not raise rates yet, but this was an indication that they might raise rates for the first time in 17 years. A year later, they raised rates for the first time in 17 years, and we are now coming up on the highest yields ever in Japanese bonds. Now, the reason that we see a scare like this is because there is something called the yen carry trade that you might have heard of. You might not have, but if you're on Twitter, there are a lot of yen carry trade experts. But basically, because Japan had negative rates, borrowing rates were so low, right? Because they had negative yields, negative rates. And so people were borrowing in yen because the rate for borrowing in yen was so low. So they would borrow in yen and then they would take that to another country and invest in high yield assets. And once these drastic policy shifts, at least drastic by Japanese history measures, once these policy shifts come into play, then that means that yields are spiking. And if yields are spiking, what else spikes? The yen spikes, right? So if you have a bunch of leverage based in cheap yen and you are buying expensive assets, once the yen spikes, then all of these investors rush to close their yen dominated positions or they get margin called, right? And in order to do that, they have to let go of all of the assets that they bought. So a lot of stocks, bonds, etc. That's why it causes panic in the markets. And we saw that the last 2 years, and we are actually approaching this territory now. So whether it's the yen carry trade, whether it's just August seasonality, August, September seasonality, I do think that this little Jenga tower here might be at risk for a correction. Now, I don't think that this is enough to cause a recession just now. Obviously, I cannot predict black swans. I could be wrong, but this is just my assessment based on history. And I'm not even sure that the yen carry trade is as dominant as it was the last couple of years because yields actually have gone up in Japan steadily. So it was attractive back when rates were negative and back when yields were low. So what opportunities do I see in the market upcoming? Well, first of all, I wouldn't try to get cute and short the market. Certainly you can hedge, right? So if you have a very portfolio heavy or stock heavy portfolio, certainly you can hedge with QQQ puts, SPY puts, etc. if that floats your boat and you know what you're doing. I wouldn't start the hedge now. I would wait until earnings season is done. You do not have to catch the absolute top. As a matter of fact, you probably won't. But we have this gap here on SPY between June 23rd and 24th. We have the gap between May 9th and May 12th. We also do have a gap down here between April 22nd and 23rd. Like I said in my last video, most gaps get filled, not all, but most. So they don't have to get filled. I could see this one getting murked for sure. Maybe even this one here. This was the start of Liberation Day. This was Liberation Day right here. So it would make sense to me if we do get a deep correction in the same way that we did last August and the August before. And it has to do with the Japanese carry trade. Maybe it has to do with a Trump tweet or some new policy that he came up with. Maybe earnings and guidance were not as great, right? Like maybe now the chip companies or the hyperscalers will say, finally, we are scaling back in 2026 on AI. We have to try and find a way to develop based on everything we invested in and bought. And in 2026, our guidance is that we are going to slow down AI spending. Something like that could also affect the market in a big way from a correction standpoint. But I am still very bullish for the year to come. I do think that we will be green into at least Q2 of 2026. Also, I want you to pay attention to something before I move on to more opportunities. When the SPY does crash, it typically crashes to the previous all-time high, right? So in 2015, when we had that double dip correction, this was the all-time high. When we crashed in COVID in 2020, remember when it seemed like the end of the world in 2020? That was the top in 2015. Remember in 2022 when we had one of the worst bear markets ever outside of 2008? This right here, the bottom of 2022 was the top right before COVID, right? Like when we hit this top here, it was all euphoric. Oh my God, I can't believe the S&P 500 is at an all-time high. In 2022, when we crashed to the top of 2020. In 2024, the tariff panic, right? We crashed to the top of 2021. So I have no doubt that, if we get a correction and then the market keeps going and then we see a 7,000 SPX in 2026, right? By the time we crash, we will likely crash to the top of 2024. So for everyone that's thinking, oh, I'm only going to wait until a 20% crash to invest. In my opinion, yes, obviously you should invest if we get a 20% crash. But waiting for a 20% crash means you miss out on all the gains. And by the time we drop, we typically drop to the previous all-time high. It's just how the S&P 500 works. It's how these levels work. It's how psychology works. It's how algorithms work. So like I said, if you have a stock heavy portfolio, you might want to think about hedging. There are certain short-term positions for me or short-term swings like SOXL. This is a triple leveraged ETF. I do not want to hold, even though I bought SOXL at $7, it's now trading at 27. And yes, that was sent out in the Discord. You can see here, April 7th, shout out to Kirsten, one of our trusty analysts, sent out the alert starting a midterm swing position on SOXL, first add at $7.80. But something like triple leverage ETFs, TQQQ, SOXL, these are things that you want to consider taking profits on because they are 3x leveraged. So when the price of SOXX drops or SMH, which are both semiconductor ETFs, this will take a 3x hit. So if those drop 10%, this will drop 30%, right? So you do want to take profits on these and then re-enter them if and when we do get a correction, in my opinion. Now, AMD, you guys know that I've been bullish on AMD for a couple of months now. I wasn't initially bullish on AMD. It was a stock that I would routinely short in front of you guys. I would tell you this is the advanced money destroyer. Do not trust any of these rallies, right? It wasn't until it started printing higher lows. And then when we got that breakout from here, I said AMD is one to watch out for swings. It wasn't until we started getting these reports of comparing the MI350 series AMD chips to the Blackwell chips, both the B200 Blackwell and the newer B300 Blackwell. This is the most powerful AI GPU on the market right now. And if you compare AMD's MI355X to it, you could see that it is very comparable, beating it in some metrics, matching it in others. But if AMD, which you could see in red here, can gain some of the market share that NVIDIA has, right? If this continues to trend a little down, this continues to trend a little up. Like I told you before, if we're talking about asymmetrical opportunities, AMD is a $200 billion stock. NVIDIA is a $4 trillion stock. And although I think it will get to 5 and 6 trillion, maybe even in the near future, which one do you have a better chance of doubling your money on? If these stats are true regarding AMD and competitors, or not competitors, but hyperscalers and other companies say, whoa, we cannot find these Blackwell chips, maybe AMD is a good substitute, or these AMD chips are cheaper than the Blackwell chips. So we are a small company. We want to leverage AI. It might be better for us to start buying these MI355. So I don't know. I'm not a fortune teller. Until we see AMD's earnings and guidance, and they tell us that these MI350, we cannot keep these in store anymore. People are ordering these at the same degree that they are ordering Blackwell chips, and we have never seen demand like this. Then AMD, I think, can get back to above 200 comfortably. And AMD is a stock that can double, because if it doubles, it will still be under a $500 billion company. That is one that I'm definitely not selling, and I'm eyeing these gaps here, these gaps that everyone and their mom can see for additions to the portfolio. Obviously, I will likely have swing trades as well. If you want access to all of the swing trades, make sure you sign up to the Traveling Trader Academy below. I told you guys about this SMCI breakout, sent out the exact details of the swing, the strike price, the expiration date, what I bought it for, banked 40% on these SMCI calls, the same ones that I told you guys about. I think Amazon is on a warpath to all-time highs, just making higher highs and higher lows. This is textbook market structure here. I don't know how many times I got to tell you about Google, but it is inchworming. It went from the 140s, creeping up to the 180s. I know that Google has not had this parabolic run that everyone wants, but it cannot be ignored, right? When we started talking about it in the 140s and is now trading in the 180s, I do think Google's gunning for this gap here between 190 and 200. Apple is eerily quiet here. Apple needs to release an AI update ASAP. It cannot release these phones and tablets and computers in September without giving us an AI update. Nobody uses Siri. Nobody cares about Apple Intelligence for now. We need to hear that you are working with Anthropic or Perplexity or someone else, and you are serious about improving the AI capabilities of your devices. Otherwise, nobody cares. You are just a computer company that has fallen behind in AI. If we get that announcement, I think Apple breaks out heavy. I don't work for the company. This is a risk. Assess your own risk. Now, ASML here, I think, gave us a gift. So ASML is a stock that I talked about that I'm still bullish on because it is a monopoly. And it dropped 11.5% after earnings, after it beat revenue and beat earnings. But it was bought up for the entire day, moving up 4% from the bottom. Now, the reason that it dropped was due to an overreaction because of statements that they made about uncertainties with regards to tariffs for 2026. It said CEO Christophe Fouquet indicated no guarantee of growth in 26, raising concerns about long-term demand and amid global uncertainties and trade tensions, particularly U.S. tariffs impacting the semiconductor supply chain. So if Trump waffles on tariffs once again, and he does the taco thing once again, then I think that ASML can get realigned in its initial trajectory for growth in 2026. This is clearly a consolidation level here, and I think this is a dollar cost average level for ASML. ASML has been going strong really since 2002. This trend line here that you see has been going on since 2002, and I don't see a reason that it's going to stop now at the height of the AI trade. Tesla's back at its consolidation level here, really needs to see another couple of engulfing candles to attack the 367 highs. But with all the shit that Tesla has been going through in terms of in the news with regards to the robotaxi was a fail, they're hiding concerns, the Trump versus Elon, the Epstein thing, etc. The fact that it's still trading at 321 is actually pretty resilient. Nobody thought that with all of the news cycle hurricane that it was in, that it would still be trading at 321, right? In the old days of Tesla, that would have taken it down to below 200. We just need more robotaxi updates because they cannot bank on the fact that they launched in this very small area in Austin. We need more updates, and I think we will get those. I'm intently looking at Costco here. This is one that I keep missing. I just never remember to add it. But if Costco can breach this long-term trend line that it's been in, and it is already below 1,000, but if it can breach this and start dropping to below 900, I'll be very interested in picking up Costco. This is a stock that I just forget to buy that really has been going up since I was a teenager, basically. Healthcare, I'm patiently waiting on healthcare to see if we can get more of a drop down to this trend line. This is XLV, which is the S&P sector, or the healthcare sector of the S&P. I still would like to see United Healthcare below 200. I would like to see Novo below 60. And going back to the seasonality thing, to be honest, if you look at just since the last 3 August, if you bought VIX calls on the last day of September, if you look at the VIX here, we went from 19 all the way to 35 in 2022. In 2023, we went up. It was the most subdued out of the 3 years, but we went up from 13 all the way up to 19, and then finally again to 23. And then if you look at 2024, we went from 16 all the way up to 65. So honestly, buying VIX calls at the end of July, especially while the VIX is lollygagging here and it closed the lowest close since February, I might put a monster VIX play in the Discord. I think buying outright VIX calls, a lot of people do it wrong. They don't know that the VIX is based on VIX futures and not VIX, not the VIX index itself. I think people go too far out of the money with VIX, and the VIX spikes, but then they lose money and they wonder why. They just don't know how the VIX works. So I might put together a spread play in the Discord for the VIX, but I think that is probably a surefire way to bank pretty big. I don't want to use the word surefire. I would say that the odds are with you. And I'll be super excited, man, if SOXL can get down to back to the teens. Oh man, I'll be super excited to load the boat on SOXL once again. If it does something like August 2023, when we were V-shaping out of that bear market, and in August, we dropped from 28, which is where we are now, around there, all the way down to 14 and then rallied to 70. If we can get something like that where SOXL drops to that 15 range or below 15 in August, September, that is going to be an opportunity, man. So in summary, I am bullish for the rest of July. I do think that a lot of the move has already happened. We may get this wait and see type of moment until all of the earnings are released. We may see a little uptick towards the end of July. August and September have horrible track records. The last 3 Augusts were marred by what was going on in Japan, and now rates or Japanese yields are at all-time highs. So I definitely do not want to stick around in short-term positions for that. I definitely want to be able to hedge with maybe some volatility calls, maybe with some puts, depending on what your portfolio looks like. I definitely want to be ready to pull the trigger on some more long-term buys or dollar cost averages, or even getting in stocks that I wasn't able to get in, like Costco, for instance, because I do think based on the stats that we have, that 2026 will be bullish, at least for the first half of the year. Obviously, I'm not a fortune teller. Obviously, I'm not Doc Brown. Obviously, I'm not Nostradamus. A black swan could happen. I don't know. That is my plan. That is my narrative. That is what I'm sticking to until I see different, and then I will have to adjust if that time comes. That's the only thing that you could do in the market. I'm not a predictor, right? I just react based on the parameters that I set, based on the data that I have and what I'm seeing. And of course, you manage your risk along the way, because that is the only way to stay in the game. If you oversize getting excited and you end up being wrong, that is when you lose your ass, versus someone who has a narrative and they end up wrong, but they sized appropriately, they're still surviving. Let me know what you think in the comment section below. Are you going to hedge in August, September? Were you thinking along the same lines? Are you going all in? Are you going all out? Do you have short-term positions that you want to exit? Do you have long-term positions that you're excited to buy? I want to hear from all of you. Leave it down below. I hope these videos help you. Leave a big fat thumbs up if they do. If you want to join hundreds of other like-minded traders, including myself, I go live every single morning at market open, telling you what I'm seeing, day trading options and futures. If you're not interested in day trading or swing trading and you're only in it for the long-term analysis, there is a much more affordable tier below as well. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace. Since it's a Monday, we can afford to trade Friday options. On a no news Monday, I would probably go half of my typical size. I'm gonna go 165 on NVIDIA expiring Friday. All right, son, let's go. If we can get above that, I think we're in business, guys. Let's just get above 164.25. Come on, NQ, shoot for the stars. Can we get the double digits? Get above that high, baby. Take us to Valhalla, baby. All right, I'm gonna take off 15 here. Hit that 24%, kids. I got 10 left. All right, Audi at 31%, guys. Audi at 31%. Read that shit to a T. Beautiful, beautiful trade.